Hello, how are you doing? Welcome along to FTUK's Non Farm Payroll live stream for the April's jobs data out of the Bureau of Labour Statistics. It is Friday, the 8th of May 2026, and I hope you're doing well wherever you are in the world and whatever you've been trading this week. Good evening to you in Asia and good morning to you in the United States if you are just waking up. It's just gone lunchtime here in the UK, and non-farm payrolls will be hitting the wires just around 14 minutes time. It's going to be not too complicated today, but I think the themes that are driving the market are a little bit disconnected, so we'll try and unpick it all. A big thank you and hello and welcome and amazing thank you to Traders Union, who are sponsoring our live stream today. It's good to have you with us. Traders Union are amazingly massive, big website for trading. We'll talk about that in a second. And you do have a giveaway. They are sponsoring our 5-account giveaway today. You still have time to get involved, and we'll go through those details as well. But Non-Farm Payrolls is here. Time to jump in and see what we've got looking at today. So we've got 62,000 jobs expected out of the Bureau of Labour Statistics in 15 minutes time. That's down from 178,000. It's quite a big step down. That jobs market's definitely softening at the moment. Unemployment, that's not expected to change, sticking at 4.3%. Look at the average hourly earnings though, both on the year-on-year and the month-on-month reading. Slight sort of flavour of inflationary pressure there as well. 3.8% expected on the year-on-year and 0.3%, just 0.1% uptick on the month-on-month reading. Now, I don't think they are going to be particularly impactful. I think it's purely going to be today a numbers play because there's been so much yo-yoing in that jobs data and it's considered to be quite soft. So for me, that is exactly where I'm going to put all of my attention. Now, you also get some kind of a barometer, some kind of a heads up. So we've had a whole raft of jobs data this week. JOLTS was out first of all. And you can see that ticked lower, 6.8 million from the previous 6.9 million. And look at the job quits as well. That was starting to just push up a little bit as well. So that's more people quitting. So lower jobs, more people quitting in March. So that's a kind of useful barometer. But of course, you always get a fly in the ointment, and that was ADP, because ADP printed higher. Now, ADP is private sector payrolls from the automatic data processing company that do all the pay slips for all of the private sector in the US, and you can see there 109,000 from the previous reading of 61. But look, it was relatively in line with the forecast at 99,000. So can we use that? Sometimes you can pick something from that for non-farm payrolls, but it's not always that clear cut. So Traders Union, thank you very much to our friends at Traders Union for sponsoring today's live stream. It's good to have you with us. It's a fantastic global community. It's well worth having a look. They do great comparisons in brokers and prop firms, all kinds of different like market analysis and trading insights, great educational resources as well. Now, if you are a trader, whether this is day one for you or you've been doing it 10 years, Traders Union definitely have something for you. It is well worth considering. If you have a look at their website, you'll see there's tons and tons of information on there that you can have a good look through, and there's market analysis galore. It's a really cool website, and we're really glad to be partnering with them. Now, what they have done is they will be partnering with us today for the giveaway that we are doing. And if you have a look at the link in the description, you will see that we've got 5 trading accounts to be given away. Now, you've still got time in the few minutes before the non-farm payrolls. It's $5,000 instant funding accounts. Click on the link in the description. I've dropped it into the chat as well. Hello to everybody on the YouTube comments as well. It's in the chat as well. Click on that link and fill in the details, fill in the various different things that you need to do on there. You have to like and subscribe and stuff to the Traders Union feed on Twitter and also FTUK, and then stick your number in. What do you think that Non Farm Payrolls is going to be? And then you might even win a 5k instant funding account, which is very, very nice to take into the weekend with you. But if you aren't successful with that, then please do not forget, with our merger with Trading Funds a few weeks ago, you can also now get access to our amazing new Flex Challenge for just $9. This is our pay after you pass one-step account. It's been very, very, very popular in the last few weeks already, and this month alone, instead of it being a 4% profit target that you have to hit, you only have to hit a 3% profit target, which is just outstanding. So for $9, it is worth getting involved. So if you don't happen to win a 5k instant funding account, then you can get involved with the Flex Challenge, and yeah, just a 3% target to hit. Why wouldn't you want to do it? Absolutely amazing. Okay, right, let's get through everything that we need to do for Non Farm Payrolls, because we've only got 10 minutes to go. These are the numbers that we're looking for. 62,000. I am looking on the low side. You know, I think that we are going to step much lower than 178,000. You know, famous last words, of course. But I think that the number for the jobs is going to be the driving force behind the market today, not the unemployment rate. So it's going to be interesting to see how that pans out. So let's do a very, very quick, brief primer before we get onto the markets. My whole focus today is just on the stock market, which I'll explain why in a second. But what is Non Farm Payrolls if you've never done it before? It's a government reading of statistic that comes out on the first Friday of every single month. It covers everybody in the economy unless you are a farmer, you're in the private sector, private households, you're in a non-for-profit organization, if you are in the military, or you're self-employed. But if you're everybody else, then you're part of the NFP data print, and it's the Bureau of Labor Statistics that print that on the first Friday of every single month. Now, this is important because 80% of the US workforce contribute to GDP. That's growth in the economy, and that is important because it tells you where the economy is going, and the market listens to that. It's a very, very clear barometer. And you need to know what that information is. The market takes it and then it prices the markets in depending on what that data actually is. So the markets move. They always do. Why you should care? Because you should care. Because you're a trader, and if you have to care. Why? Because everybody else cares. If you're all the professionals that they watch this data, as do all of the big banks and the hedge funds and the governments as well. So you need to be across this too. Now, I don't trade non-farm payrolls anymore, and you don't have to trade it, but you do have to be across it. You do need to understand what's going on. It will make you a much better trader, and you can learn a lot from it. Now, if you do fancy trading around it, whatever you do, my personal opinion on this is that Non-farm payrolls tease up really good trades the next week. Usually the Monday after non-farms is quite quiet, but usually after that you start to see some good trades start to form. So you can use the range that gets created around the volatility in non-farm payrolls as a fantastic line in the sand for next week. But whatever you do not gamble into it. Most prop firms don't like that, and it's not surprising because you're just gambling and you can make and lose a lot of money very quickly. But don't be that guy that blows his account simply because you held too much going into non-farm payrolls. Don't do it. Now, what are the current themes? We'll just run over the current themes and then I'll have a quick look at the markets before we get the actual data. It's not too complicated, but they're quite differentiated, different themes, and the market seems to be paying equal attention to everything at the moment. The war in the Middle East, obviously, that is the big driver at the moment, and the status of what's happening with the Strait of Hormuz is very, very binary. It's either a good situation and improving, or it's a bad situation and getting worse. It really is. The market is definitely seeing it like that, and it seems to be moving in line with, okay, there's good news or there's bad news. The strait is open, or no, it's not, it's closed. You've also got the new Fed chair that's coming in as well. I spoke about this in the analysis last week. Kevin Walsh is very, very dovish. That is lowering interest rates, putting money into the system, and that is supportive of the stock market, supportive of equity markets. And you've also had a fantastic earnings expectations recently as well, which is also pushing the equity markets. And that's where I want to focus today. Equities, again, at all-time highs. The S&P 500 really pushing at those all-time highs. So the question that you've got to ask yourself today with the data that we're going to get today is this really stoking a blow-off move in stocks? Personally, yes, I think it is. But you know, I've only been doing it nearly 20 years now. I think it is. You can feel that. We're feeling a little bit top heavy as well, and there's too much risk in that Middle East theme at the moment for me to be sort of like, you know, confident in these levels. So I do think that is a relatively overpriced stock market at the moment, and so potentially a blow-off move is what we could be looking for, and it could be exacerbated today by non-farm payrolls. So this is the way that I want to like look at it, and it is very simple, but they're quite disconnected, the actual news from the jobs data from the situation in the Middle East. And this is the way that I am looking at the markets at the moment, and that is, you know, very binary with the Strait of Hormuz. It's either open or it's closed, and it's getting better or it's getting worse. Good news in the Middle East is dovish. It's a lowering of interest rates. That's fantastic as the energy starts to flow back through the system, and this sort of like global supply network gets unlocked. So good news is a dovish play that is lowering interest rates, that is supportive of the stock market and downward pressure on the dollar. Bad news on the opposite side of that is hawkish. You know, that's why, because, you know, lack of energy it creates that sort of like that inflationary push, and then therefore you need the interest rates to sort of like counteract that. So that's where you get the hawkish theme from. So the Strait of Hormuz has that role to play: good, bad, dovish versus hawkish. And then the non-farm payrolls, when you attach that to it, a lower number today on non-farm payrolls, which I think we're going to get, that is going to be a dovish play, because that's lower growth. That's keep those interest rates low, versus if you get a very high positive number, higher than what we were expecting for ADP as well, that in itself is going to be hawkish, because there's less inclination to bring those interest rates down. So that in itself, I think, is going to give us a very, very interesting landscape to play with. So I've got 4 minutes to go before we get into the actual jobs data itself. And what I'm going to do is I'm going to look primarily at the stock market in a second, but I want to leave you with one phrase. And if you're watching this for the first time and you've never been across non-farm payrolls, and you're thinking, why do I have to pay attention to this? You need to understand how important these themes are. They really are. Now, the situation in the Middle East is not necessarily going to have an impact on the jobs data today. That is certain. But it can change very, very quickly. So you've got the volatility from non-farm payrolls on the unemployment data, and you've got this uncertainty created around the Middle East, which could change at any moment, and that is the key factor. So the reason why you should put some work into understanding how you're going to play these situations is because of this sentence here. So whatever you do, take a screen grab of this sentence here, write it down on your desk, and make sure that you've got a game plan. And I'll read it out for you. You don't need to know what's going to happen next. You really don't. I don't know what's going to happen. Nobody knows what's going to happen next. But as a trader, you do need to have an understanding of which way you're going to play it when something does happen. And that is the sophisticated trading point of view. You need to understand that if something does change in the Middle East, what will happen if we do get a low print? Which way are you going to play it if you are going to then trade it? You need to have a view. You might still even be wrong, but you have to have that plan. And that is what effective, successful, long-term trading is all about. And that's what it's geared towards. So yeah, I think it's going to be an interesting one today, but I think really next week is going to be a bigger driver, and the thing that will really come along and put a cat amongst the pigeon is if we get a big change in the Middle East. Okay, let's have a look now at the actual charts. Let me just see if I can bring up my charts, because we've only got 2 minutes to go. Let me just bring up my charts here so we can see. We've got a lovely, beautiful, this is a flex funded account on the MT5 platform, which is good to see. Let me just bring that up here. There you can see it. Now, I'm only really interested today in the S&P 500. I'm not that interested in gold. You've got the euro dollar on a 1 hour chart here in the left hand corner. I've then got the S&P here on a daily, which I'll just go through in a second in the last minute. And you've also got gold here, bottom left, and you've got US oil, because of the energy sector with the situation in the Middle East, in the bottom right-hand corner. Now, if I just bring up that S&P 500, let me just show you where my analysis is. If we're getting a low number today in the NFP, then I'm going to look for some upward pressure on this stock market. And it's these areas here. If I take my Fibonacci tool, I've got 1 minute to go, so I have to be careful. I don't want to miss it. And I just get my extensions all lined up. I really, really like for upside volatility, we're looking for a blow off in the stock market with a low number. I love this area up here. That's an upside target of around about 74.31. So the downside, I like this doji here on a 4-hour. So that's a nice bracket to be working with today and then into next week. So we've got 50 seconds to go now, so it's time to start settling down. And what I need to do is bring up my data so that I've got it in front of me, because we are not that far away. Okay, market's getting ready now. I will pull this back properly, and we will see what we get. I'm going to go down to a 15-minute chart here on the S&P. Let's go down to a 15-minute chart here on gold as well, and then also on the euro dollar, because that's our US dollar component as well. And we'll see how we go. 10 seconds. Here we go. Good luck to everyone. Not got the number yet. 115. Oh, it's higher than I thought. Higher than I thought. That over the session, then that's slightly better. It is much worse than the previous 178. What's the unemployment done? The unemployment, still in line at 4.3. So that's still relatively balanced. You've got a bit of upside here on the S&P. I actually thought the initial reaction to a better number than that would be slightly, will put us under a little bit of pressure, but that's not been the case so far. But, things can change, and what a lot of traders tend to do, they'll sit and wait for this initial spike of volatility, and then they'll pick their targets off as the US session the US session opens in an hour's time. You're just starting to see that pressure now coming in. I would have said that we should get some downward pressure, but here's the thing. If we are pushing to a hawkish narrative or a less dovish narrative, I would definitely be looking for an S&P 500 or an equity market that starts to struggle. Can you see at the end of yesterday's close here? Look at that ragged action as it really sort of like the range starts to expand. That's a real fight going on between bulls and bears in these areas. So anything that's particularly hawkish or less dovish is going to push us to the downside, but you're going to get a lot of traction, which is why I really like this area down here at 72.71 for an area of a real battleground to maybe potentially get long, depending on what's going to happen over the next few weeks. So just the reaction itself is relatively muted. Let's just have a quick check on what's happened on gold as well. Not really much of a reaction on gold. So I mean, it's not the worst non-farm payrolls. It's not amazing either. So that's interesting as well. The previous reading as well was revised up a little bit as well. Now that's interesting. So that's less dovish as well. So we went from 178 up to 185,000, which is interesting. So yeah, the market was wrong on that. Although to be fair, the forecast itself for today was 95,000. Consensus at 62. So yeah, we're a little bit better than we expected. So interesting to see how that plays out now over the course of the next few hours. But as I said, what a really good game plan that you can take as a trader is to look at that range that we get, whatever market is that you're playing, demarcate that range by the end of today into your weekend analysis, and then use that as a line in the sand for next week. You'll be surprised at how many decent swing trades that line in the sand will actually tee up for you. It's a really interesting technique. Good. Fantastic non-farm payrolls. Okay, that is pretty much everything that we've got for today. Definitely an interesting non-farm payrolls. You've also got as well, if you've not got you've not been successful in terms of your numbers for the giveaway for the contest, then please do not forget that we've got the Flex Challenge at $9. That is a fantastic challenge to take with you into your trading next week. Definitely worth giving it a try. Thank you very much for watching. Have a great week in the markets ahead, and we'll see you all very soon.